So, good afternoon, ladies and gentlemen. Pleasure to be interacting with you. I think the attendance is quite thin post lunch on expected lines. I speak on this topic, and I think this is one topic which has kind of occupied our mind spaces over the last couple of years, and more so in the current year. And basis my interaction with a whole host of players in the market, I think though we may not have moved much, but I think clearly it's there in everybody's mind space, and everybody's looking to evolve their thought process as well as strategy in this area in the financial services domain. Just to give you a perspective in terms of the criticality and importance, if you look at the World Economic Forum survey, uh, I think some of the key risks that have been highlighted at the World Economic Forum, both in terms of likelihood as well as by impact, involves sustainability linked factors, be it on a climate action failure, be it on weapons of mass destruction, diversity. I think they've been highlighted as key concern areas, and over a period of time, right from economic indicators, I think the movement has moved more and more towards economic and social aspects where we are clearly seeing challenges and extreme weather and some of the climate related impacts. I think they have occupied everybody's mind space, and also with the challenges with respect to COVID that we've seen over the last few years, I think this has only gotten more and more exemplified going ahead. And as a result, I think what we've seen is there is a significant movement globally towards decarbonization, moving more towards social aspects and better governance. I think that's very clearly seen. And even in the Indian context, I think we cannot be divorced from this. India is the third largest emitter of carbon equivalent gases. I think we are, after China and US, we are the third largest. And I think incrementally there are a lot of commitments that India has done, though we've committed to a relatively elongated net zero target by 2070. But along the way, I think India wants to play a very critical role in the overall renewable adoption, and it is leading to different kind of opportunities that are emerging in the market space. I think clearly what we are going to see is the emerging credit landscape and the overall environment and the value chain for even the small and medium-sized enterprises. That whole market space is going to evolve quite substantially on account of the sustainability-linked challenges. So we are likely to see more focus on low-carbon electric systems. We are also likely to see more focus on low-carbon transportation. Then on the urban side, I think sustainable environment, cities, sustainable transportation again at a city level become very, very important. And also there is a lot of focus on more and more new, innovative, low emission related equipment on the industrial side, which is also a very, very critical element. And also areas with respect to carbon capture becoming very, very critical going forward. So there'll be a lot of R&D and solutioning in this area, which will provide again a lot of opportunities for everyone in the market space. And finally, the overall financial markets for low carbon is clearly developing in a big way. Sustainable finance also is gaining traction. You're seeing a lot of green and sustainable bonds also coming through. So the whole financial landscape and the market space will see a lot of changes going forward. And all this will be enabled by, again, data, which comes at the center of all of that. And for any kind of requirement, be it reporting, be it tracking, be it monitoring, I think it becomes very, very critical from a decision-making standpoint. And in many areas, there is reams of data to kind of deal with. If one looks at the domestic environment also from an India standpoint, over the last 10 years, I think there has been a lot of evolution on the regulatory side. Uh, Beginning with guidelines on business responsibility reporting that we first saw in 2012. Then there were national voluntary guidelines also for sustainable businesses, which involved a lot of focus on environment and social related aspects. As we move ahead, I think 2015 was the first year where some of these guidelines started becoming mandatory for the top 500 companies. They had to do business responsibility and business responsibility linked reporting. Also, from a governance standpoint, which is another key element within sustainability, which addresses the G part, uh, the SEBI LODR was kind of introduced with a lot more disclosures, lot more specific guidances, which again was a very critical element. And then I think slowly there have been some other voluntary guidelines with respect to integrated reporting also to kind of support this move towards more and more information being available for stakeholders. And along the way, on the environment side, I think there are a whole host of factors which have also been at play with respect to more and more incentives for green carbon friendly renewable energy projects. Electric vehicles have seen the FAME subsidy which has come through. So I think there have been multiple areas in which the government is working, and of late you're also hearing a lot about the green hydrogen policy and more and more sustainability, energy efficiency related equipment. I think there is a lot of movement that has happened in that area. In 2019 and 2020, again, I mean, from this year, another key thing that is happening is from FY23, BRSR reporting is becoming mandatory, which would mean for the top 1,000 companies by market cap, they will have to do a detailed reporting on business responsibility and sustainability. Now, a lot of that will involve a lot of quantitative metrics on various parameters such as emissions, such as waste disposal, etc., which is not something that we saw earlier. And it's fairly kind of, I would say detailed. And as we move ahead, in all probability, it is going to become more and more evolved. There will be sector-specific templates, etc., that one is expecting. So a lot more data will be available for the investors, for lenders, for any other players who are there, intermediaries in the market to process. So I think there is a sea change that is happening on that front. And last year we also saw another very important development. RBI came out with a discussion paper on climate risk assessment, and that to be and also promoting TCFD linked reporting. And this paper, once it finally takes shape, there were a lot of entities who gave their feedback on this paper. RBI is currently working on it, and maybe we'll have a more clearer guidelines on the climate risk front. Now, once that happens, I think it will change the overall market space from an environment lending point of view, because that includes a lot of factors. For instance, all the major lending institutions or the regulated entities, they will have to bring together, governance related aspects with respect to climate risk to be incorporated as part of their overall decision making, which would mean, board level committees, etc., having a greater focus. Then at an organizational level, a strategy for climate risk assessment, also climate risk management in terms of the portfolio risk, etc., will become a very, very important element. Additionally, there are a whole host of, policies and procedures internally the organizations will have to kind of, put across to ensure that there is adequate, adequate policies to manage the overall, risk on account of climate. Then specific risk quantification and identification for the portfolio becomes also a very important element that will start coming in. And then regular update and monitoring of those risks going forward will play also a very, very important and critical role. So again, risk management, mitigation, and ultimately, this is going to also get integrated in the capital computation. It would also mean, risk-based pricing coming through. So it brings in a lot of varied dimensions from a, lending point of view. And also finally, clear case of, proper reporting will also be kind of, available as long as you have that data which is captured properly. And also stress testing will become a very important area, and increasing focus on, lending on the green and the sustainability side will also kind of, play a overall role. And also internally within the organization, looking at internal factors such as emissions and branch offices, data centers, etc. That is another element, the organizations will start looking at, though that will play a much lower role, because from a financial sector entity, the bigger impact is on account of the lending book they have in the market. So with some clearer guidelines going forward shortly expected from RBI, we are expecting a lot of changes to kind of, come about in this area, which will throw up a lot of, challenges as well as opportunity. So if one looks at the challenges in the entire space, I think data availability till now has been a major challenge. With BRSR reporting becoming mandatory, some of those challenges will go down. But in essence, the quality of data, the granularity of data continues to remain challenge, and it's a journey that we are on. And a lot of data from customer sets, especially on the retail loan side, a lot of data at a very granular level, at a geographic level, availability of all of that, triangulation of all of that, mapping it to the overall portfolio. All those remain challenges. Second key challenge again is the climate scenario as well as frameworks globally. They themselves are evolving quite a lot. The evolution on that front is quite rapid. And going forward, I think this will continue to evolve as we kind of, evolve and learn more and more in this space. Also, in many areas, what is green taxonomy is not very clear. In many areas, there is complete lack of guidance on, what really green means, what are the kind of, risks that need to be integrated, that need to be understood very, very clearly. So I think some of those factors are clearly playing out. And the last one is another key large factor, is actual understanding and capacity building within the financial system and the organizations in order to be able to assess the risks that are around. So I think this remains one very, very important key challenge that, we need to kind of, address as we move ahead. So what does it mean in terms of the overall banking and lending space? What are the areas that they will need to focus on, and what are the things that they will need to do going forward? And along the way, what are the kind of opportunities that will emerge for data solution technology providers in this area? And at an overall level, what are the things that one needs to look at? So I think the first key area is the data capture itself, be it within the organization, outside the organization, be it of the lender, of the borrowers. I think there is a whole host of data that needs to be kind of, captured. There needs to be certain, plan for setting performance standards and tracking, dashboarding. I think one very key important area. Then from an entire ecosystem point of view of the bank, from a supply chain point of view, also a lot of important, elements need to be kind of, looked at. Second is, I think, the risk modeling of that data in the overall decision making, be it on the climate side, be it on the, if you look at the climate, be it physical risk, transition risk, and then also, marrying both financial as well as non-financial parameters to kind of, appropriately model risk, look at, various risk scenarios, be it on the climate side or even otherwise, capturing all of that together. And that also would mean, you integrate all of that in the overall credit framework. And accordingly, I mean, if there are tilts within the portfolio, be it on the trading side, maybe, entities which have exposure to chemical trading or coal, maybe look at, geographies where you have a high concentration of certain retail loan portfolios. I think those elements will have to be appropriately analyzed, risk analyzed properly. And finally, that will start getting integrated in the overall product pricing strategy. And also from a resource mobilization point of view, it's an important factor, because clearly we are also seeing a trend where resources are available for certain purposes, be it from a bond market point of view, where you have impact investors who are looking at certain areas of funding, who are willing to kind of, offer capital, but the end use has to be well defined. Similar trend we are also seeing in some instances, on the deposit mobilization side also, because the customers want deposit to be mobilized towards certain elements within the overall lending space and not everywhere. And this leads to lot of opportunities also in the overall market space. As I mentioned in my first slide, there are whole host of new businesses that are emerging, and also many large value chains also that are emerging, especially you see on the clean energy side. We've already seen on the renewable side a whole host of players in the market. On the green hydrogen mobility side, I think again we are seeing development of different kind of business models, ecosystem, etc. And I think there are a lot of global banks which are focused in some of these areas. And in India also, the focus is only accelerating in some of these areas. And these are things that we'll keep hearing over the next few years in much greater depth. So I think clearly, the market space needs solutions of ESG integration in the overall credit risk space. Customer stakeholder engagement is also another very strong area where you need a lot of solutions. Climate risk and carbon pricing is another area that you need to really look at very closely. And then reporting is another key element. And finally, from a capacity building within the organization and externally and within the client set and the supply chain, I think it becomes very important to do those capacity building related elements. So just to dwell a little bit more deeper upon what is the kind of data that may be needed to be captured and what are the kind of opportunities it can provide some of the service providers, and what is it that some of the entities need to do, and what are some of the things that some of the global fintechs are actually doing in this space. So just try to capture what is the kind of data that is needed first. So within the organization, a lot of branch level data on emission metrics, waste management, energy efficiency, those are the kind of areas you need a lot of inputs. Then from a employee point of view, I think there are a lot of internal elements that are needed. Engagement, training, development becomes very important. From a customer standpoint, also a lot of important data points, lots of relationship engagement related pointers that need to be kind of looked at. Then digitization and more focus on cybersecurity, where I think you are already seeing challenges there. I think some of those areas become even more pronounced. And finally, assessment of the portfolios and the internal risk models to kind of assess the kind of risk, the borrower profile become again very important. And you need to capture data for all of that, and you have to model data even for future to kind of take decisions. From a borrower standpoint, I think lots of important information with respect to their own environment related metrics. For corporates, probably you can still get data in public domain going forward with BRSR reporting. But for individuals, small, medium-sized businesses, I think therein lies the challenge, and what are some of the structured metrics, etc. one may need to capture, define, becomes very important. Then from a social standpoint also, across their value chain also, what is happening needs to be understood well. And sector and geography related risks need to be kind of modeled and captured. So once you have the data in place, I think in order to kind of faster turnaround with respect to credit monitoring, credit cases, disbursements, etc., you will need a strong reporting and turnaround engine. So a lot of good opportunities there. Then from a risk management point of view also, a lot of modeling has to be done on that data. And then finally, all that will go and add up to a good product strategy also going forward. So all these elements will kind of integrate and provide that opportunity that in this space as we move ahead. And today, at least a lot of startups that we are seeing in the space globally, I think many of them have kind of looked at more from a external customer standpoint. So you have entities such as Aspiration, where clearly they are targeting eco-friendly spending and saving by customers, and they are looking at lending in that space. So basis data monitoring, they are able to kind of actually identify opportunities where you are kind of deploying your deposits in eco-friendly ways for customers. So clearly customers do get a repository of where you're deploying your cash. Also, you have entities such as Raise Green, where again, this is again a fractional ownership platform, which kind of, looks at green impact investing and deploys capital of customers in some of these areas. So again, it's again requires a lot of data capture, simulation, and also kind of, regular tracking of all that data. And many of them have built up, fairly large, AUMs in this space. Then on the sustainable home finance, again becomes a very home improvement area is another area again where we are seeing entities such as Goodleap, Mosaic, where again for sustainable home improvement loans, I think they are getting a lot of capital to again get deployed in this area. So clearly another interesting opportunity. Then Incountable is another interesting one where I think consumer purchases from a sustainability standpoint are tracked, and consumer purchases in terms of their impact on the environment is kind of reported to some of the the end users of credit cards, so they can clearly track what is happening. And again, it is again an important area that they are looking at. Then in addition, lastly, the last example is a carbon credit marketplace, Climate Impact X, which is again, provides a good platform to kind of, again, exchange carbon credits. So I think there are a whole host of opportunities here. Many of them, what I highlighted earlier, were more from the traditional standpoint, and in the market-facing, customer-facing, again, you have whole host of, areas that one can, really look at. So clearly, it'll be an exciting space for all of us over the next few years, and it'll throw up maybe good opportunities to kind of, engage. And as long as you can provide a good, strong technology solution, I think there should be good opportunity, and the regulatory winds are clearly in favor of, incorporating sustainability in the overall market space. So with that, thanks for your time, and it's been a pleasure interacting with you.
Thank you. Thank you so much. We can probably take one quick question if there's any question from the audience. Yeah.
Sorry, first of all, I joined a bit late, so I don't know if you sort of touched upon this already, but probably one problem area within the ESG reporting space as a whole is pretty much greenwashing, right? So we know a lot of companies sadly do engage in it. They know that ESG gets good press and it's sort of growing in India as well. I guess in the global market, it has sort of grown to see how we can avoid greenwashing or how we can identify greenwashing. But I don't think the India ESG reporting space is there yet. So is that a problem area? Has there been any sort of development on that front to weed out greenwashing?
So I think this is a very important area that you've referred to. I think this has been a key talking point even for all the various green sustainable bonds that have been raised and the companies reporting. I think it's been a clear problem. So I think what we are clearly seeing is maybe some of the entities will start having a better track record of reporting. And as you start getting more and more data, there is the ability of the analyst to decipher the data and to kind of sift off any potential issues becomes a lot higher. Secondly, we are also getting some independent platforms who are also providing you data, for instance, of emissions of a plant in a particular location on a regular basis. So unless, you can utilize some of that data to counter question the management, that is becoming important. And thirdly, from a regulatory standpoint also, going forward, I think increasingly it will become very important to have a very independent assurance of all the data that you're putting out. So collectively, I would say these 3-4 elements will lead to a lot more robustness in the quality of data going forward and lot more reliability. So it's just a matter of time, and we have, over the last 2-3 years of our journey, we have already seen some improvement in the quality of data being available, but I would think, it'll only accelerate going forward. Thank you.